with Conquer Trading and Investing, and today is our Fun Friday session. It has been a fantastic week. If you have a friend who's interested in the markets, or you have a friend who's now becoming interested in Bitcoin, go ahead and share the YouTube channel, pointing towards the live tab, and tell him to watch any episode that piques his interest from the title, Monday through Friday. Some incredible work shared this week. We get to go ahead, dig in today, and enjoy this Friday. We're already here, sitting here, right? Managing, trying our best to get behind the ball, in front of the ball over here, holding some open positions over here. Nothing going on today. We are cruising. Ethereum holding an open position, 38% into profit. Solana now, finally Solana entering into the market, 5% into the market. Cardano building up a big one here, 18%. And Bitcoin bull runs continues here to be in the market. BTC 107 side skip that last trade over there for the swing traders. 101, 108. They were quick in, quick out. NVIDIA here beginning to build 20% into profit. This is the daily over here, folks. This is just trading here, managing positions out on the daily time frame, crypto-esque style returns. Tesla just taking a new entry, 1% into profit, 2% into profit. FNGU continues lagging here, minus 2%. TQQQ up almost 30%. MicroStrategy after today's dip, MicroStrategy down about 4%. Last I checked, still holding open position 7%. And then spot ETFs over here, holding a position, new position here, 7% into profit. We are fully allocated here across stocks and across Bitcoin and crypto. We have over here everything in the market right now except for Bitcoin. It is appropriate right now. Can we get behind the ball much? We don't get behind the ball. We get in front of it. Staying on the right side across markets, turn after turn. It takes extreme work. It takes every day looking to just grind it out and learn a little bit more and put that knowledge, put that wisdom to use day after day. It takes a lot of humility. Takes a lot of humility. It's very difficult to do. Obviously, today I want to look at, most importantly, whether or not the markets have come too far, too quickly, and set our expectations going forward. Before we do that, this is a good lead in over here as we're looking at, obviously, like, it's unusual. Bitcoin, ever since 2023, has really been leading the way. And now we see Bitcoin currently consolidating out of the market. And why we see that, Ethereum leading over here, and now Cardano and Solana joining the party. And then if you're reminded, I think it was on Monday video, we started and began looking at what was potentially going to be developing here on alts, as at that time, they were either getting ready to break out of that channel, out of that bull flag, or break down. And you never know what it was going to be, but we were stalking the breakout over here, setting expectations, and all of a sudden we've seen an explosion taking out the last swing high. So right now we have a couple of things happening. We have obviously a series of lower highs, now a series of higher highs that's very bullish. I'm also saying to myself, well, this broke outside now to the upside of this channel, right? And I guess that's I guess it didn't, you know? So my eyes were initially drawn to this resistance, and we spiked out. I'm looking at a 3-day. Let me get a little precise. Let me come down to the daily, and we did break out over there. So I don't know how, like, whether or not that channel should be over here. I could come over to here where we found support and then resistance. It all looks fuzzy to me, and I don't have any type of clean read on it. So I'm just going to back off that thought. And that's really what this is all about, right? It's going ahead and going down tangents and rabbit holes and tangents and rabbit holes. And often those mega rabbit holes, often they lead to nowhere except that you're accumulating knowledge that's going to be able to be used elsewhere. That's how it works. Whoop, whoop. CT. What is going on, everyone? Glad you are here. It is good that you are here. Fun Friday out on CTM. We're going to be talking about whether or not the markets have gone too far, too quickly, and set our expectations, it doesn't mean that they have. I'm going to take a genuine look at it and try to get my best bearings. We are obviously holding some positions here that continue to move into profit, but every once in a while, you get to actually push your winners further than the average. Further than the average. Just to give you an idea, though, for example, we have an open position here on Ethereum right now, 38% into profit. What is the average winning trade on Ethereum? So the average winning trade on Ethereum is 22%. So we're pushing that almost double the average. But what's then the largest winning trade? And it's not anything close to right now. It's 153%. So you could see that over there. So yeah, we're definitely well past, almost twice as far as past as the average winning trade on Ethereum. However, we're not anywhere close to what has been the largest winning trade on Ethereum. And every once in a while, that works the same across stocks as well. You could take I'll take T triple Q since it's our lowest performer. It's our lowest performer, and I mean, still last 5 years, 748%, still nice. And you can see that the average trade on T triple Q is 26%. We're just about average now where we are, with the largest being 85%. Sometimes you get the opportunity to go ahead and push your winners. And I hope that this is one of those opportunities, but we sure do not know. That's why we ride the momentum. As long as the momentum is there, we're like big wave riders, right? And that means that you have to take lots of short ones, lots of repetition, and then all of a sudden, just like time passes and you find yourself riding a big wave. Over here on the altcoins, what we're looking at now is altcoins excluding Bitcoin and Ethereum, and we've seen that mega breakout, and you can see that they are approaching all-time highs. And this is obviously versus the dollar. If you come back and you look really quickly versus Bitcoin, right? And you could see that excluding this is excluding Bitcoin, Ethereum, and stablecoins. You can see that mega breakout. And let me come back over here one more time. Let's go ahead and I guess we'll just look at Bitcoin dominance then. And you could see that our expectations were, if we broke out, that maybe we're going to come back down and test somewhere between 60 and 61. We're almost there. We're coming into that area of what would be support right now. And it doesn't mean the move will stop there, but that was the first assumption, that likely this could be a potential target, and Bitcoin may or may not find its footing here. And that might be the case. And if we break down further, if we do get below like 60% dominance at that point, then, well, it looks like that this could be a much bigger move here on alts. You don't know what's going to happen. What you have to do is go ahead and be able to manage risk about what is happening. And right now we have this solid line is like, okay, on the breakout, this would be where this move is invalidated. And obviously, the further we move into the fall, the higher that stop loss moves up. Hopefully, that would be great if there was a breakout to the upside before then. And then again, we'll just continue managing that position. I don't think there's anything to do here at this particular point in time today to manage these trades. Yes, we're into a pocket of resistance right now, this pocket of supply. We're wicking down a little bit, but I wouldn't read too much into it or anything today, as we're looking at $2.8 trillion of options expiring. I would think that today is just the day that's why we're labeling it Fun Friday. Nevertheless, on this Friday, we're going to go ahead and put the work in and make sure that we walk away learning something new and having more clarity about what's taking place in the markets than before we got into it. The dollar is, I think we have to, as we had that buy impulse trigger, And right now with the dollar moving upwards, and we look at the seasonalities and we say, by the end of this month, we move into the most favorable portion of the year for the dollar strength. And then we could say, or I say to myself, what's really interesting is that at the start of the year, you saw the mega strength on the US dollar, milkshake theory in full action. Dollar comes off 10%. During that same period, Bitcoin was actually even up until right here, up until the beginning of July. We just had that recent breakout on Bitcoin. And up until that point, though, with the dollar off 10%, Bitcoin was even. And I was surprised. I think that normally if you tell me the dollar is going to be off 10% in 6 months, I say, well, Bitcoin's going to be higher. That's not what happened. And then we've seen since Bitcoin's breaking out, the dollar strengthened. That's interesting. Isn't that interesting? I have to find, we're headed to the rodeo tomorrow. I have to find that tweet when I said, watch when the dollar strengthens. That's when you're going to see Bitcoin begin to run. But that looks to me like a potential bearish pattern setting up over here. If the dollar were to break down from that, I have to watch out what could happen over here, as that mega downtrend that the dollar is currently in could definitely continue. So again, we're not getting comfortable, and we've really been going since April kind of sideways on the dollar, and that could continue for longer after a 10% move to see a range, a consolidation before ultimately the next move, whatever direction that would be, is quite normal. Nevertheless, this usually tires a lot of participants out. They get a little they get tired, they get exhausted, and that's usually right before a big move ensues. So what I'm wondering though is that strength we're seeing on the dollar contributing to Bitcoin. I look, I know that sounds fuzzy and funny, but I told you that well before it began, and I'm just trying to move over and find a chart over here of Bitcoin, and you go back over here and you look at in January, right? And then you come back all the way to the beginning of July, and Bitcoin was at $100,000, even with the dollar coming off 10%. Recently, we've been seeing the dollar strengthen, and recently we're seeing the dollar started strengthening towards the end of June, the last week of June, right? And so that was over here, June 20th. I guess the dollar's flat. Again, I'm just making observations, and at the end of that observation, I was like, well, I don't really think it's the recent dollar strength since July that is helping Bitcoin. Bitcoin looks like it's doing Bitcoin things. But bum. Yeah, and whether it's delayed or it's right on time, yeah, you know what? You got over here into April. Here was April. Was it going to break out ahead of April? I certainly thought it was. I certainly thought as we were consolidating the election pump up and you saw Bitcoin consolidating, my hope that it was going to break out to the upside. And then, again, this is where we talk about managing risk. We put out this level right here, this structural line that you're looking at, and we said if price breaks below here, I thought it was like 94,000 or whatever it was, that the drawdown on Bitcoin is going to be much larger, and the time it takes to repair it much longer. We went from a 15 to a 30% drawdown once we broke that line. Again, my expectations were we were going to break out to the upside, but it doesn't matter what my expectations are. It matters where I'm able to manage risk around. We broke down, and then it took a few months in order to go ahead and repair all that damage. We were able to consolidate underneath resistance again, finally able to break out. And, look, we've talked about what the measured move is on this breakout, and it's very high. It's $170,000. And you have to wonder by the end of the year, we'll be able to do that. Right now we have a breakout, right? And was this the retest? If I come down to a small time frame, and you can say, well, that certainly looks like the breakout or retest. And so far there's a lot of room, and that looks very, very healthy. But there's nothing to say that we can't come in and test even lower. and just so you'll have the awareness as we come into the weekend, like where I have the yellow line right now, the breakout line, that's the outermost resistance. You have to go ahead and bring it down over here as well. Just trying to find, my eyes are over here. My eyes are over here. This retest. You could come down and test as low as here, just below $112,000. And that's still healthy on a breakout retest. This line over here is where something's wrong. You should not break this line. This trend line over here, if that were to break on the downside, that would say that this most likely is now a liquidity grab. I mean, clearly, Bitcoin at this particular point in time, there was a lot of we call them OGs, right? And people have been holding Bitcoin for 7 to 10 years, and they were distributing Bitcoin. They were very happy to take some profits and be able to do some things for their family, to diversify their investment, whatever. I mean, look, I'm sure that many of those investors do believe in Bitcoin and that Bitcoin is likely going to $1 million and not stopping there. However, it doesn't mean that like they sold all their Bitcoin. They're probably selling a proportional amount compared to their overall holdings, diversifying, taking some profit. And there was a significant amount of supply being offered. And because I look at the amount of corporate treasuries that are buying Bitcoin, and I mean, look, they're buying it, but there was a lot being offered for them to buy to maintain that price. We saw the leg up, and you could make the argument again that look, they're still at around 120, 124, whatever. There are willing people and sellers, and whether or not this winds up being quickly faded and move up to the upside, or because I think that not only is the overall bid consistent, it's did you hear about that? We talked about that the movement of those coins a couple of weeks ago, and then this week there was another Satoshi Era wallet that woke up, and I think it was a large number. I think it was 80,000 Bitcoin. If someone goes to cointelegraph.com and checks the editor's picks, they'll be able to get the exact number. I don't like to speak about things that like I'm not certain about, but I think it was 80,000 Bitcoin, and they sold it all and the market absorbed it. That's so bullish to me. That's so bullish that the market at these prices was able to absorb such a large number. And, or like we'll find out. And you know what? Guess what? This is all super healthy. If we come down and we test into here and able to, that's great. That structure's held. But if we do have a liquidity grab up here and we break down, then that's not good news. That's not bullish. And that would, often when you have a fake break one way and then you have an accelerated move the other way, and which means to me that, yeah, I mean, we could come down and be testing down towards the 90,000 area if that were to occur. Is that a big deal? 9.2 billion. Was it 80,000 then? Yeah, good. Thanks, Robert. I appreciate that very much. For the market to be able to absorb that is absolutely brilliant. Absolutely brilliant. They only sold 10K. Well, that's not as brilliant. But I have to tell you, if you go back not too long ago, if you go back towards 2017, 18, 19, and you saw coins from that era even move, that would have spooked the market into a major, major correction. 20% in a heartbeat, in a second. Now we're seeing two Satoshi Era wallets moving within a matter of weeks, and market here is just off of all-time highs. You could see the changing evolution of the market, and we're bullish here on Bitcoin. So that was a bit of the dollar story. And before we get into whether or not the market has come too far too quickly, what our expectations should be and what we're looking at, let's first go ahead and look at what I call the greatest opportunity, the best trade over the next 6 to 12 months, and that is going long on the 2 year as the Fed, with or without Jerome Powell, is getting ready to cut, it seems, into 2026, end of the year, or into 2026. And if the President Trump gets his way, then he'll have a Fed chairman that's actually willing to play a lot more ball and lower rates. I want to say significantly, but we'll find out and we'll see what happens ultimately. It was interesting today. We had the University uh, of Michigan. I guess it's not even on here. Hold on one second. I'm looking ahead to next week. It's a light calendar next week, by the way, with just unemployment claims on Thursday. ECB is meeting also on Thursday, and a bunch of PMI and services data out of Europe. Coming back to today, though, we had the University of Michigan Consumer Survey. I guess it's an orange event over here. And what's interesting to me is that you saw were remember those elevated expectations we saw about what we were going to be looking at in inflation, and we were looking at right over here. You could see that Republicans had extraordinarily very low expectations, and it almost, like, I don't know why they were so low. And it seems interesting that they've kicked up a little bit, which seems more appropriate to me. I don't know why they were so low, and maybe they were kind of reacting to the drastic expectations that a lot of Democrats had at inflation at 7.7 as the tariffs were being instituted. And you can see even independents have brought down their estimations as well, as people are seeing, I think, that we overreacted. I wonder, I don't know if this is true, but I wonder, I don't care what side you're on, if someone from the other side of views that you holds really extreme views, even though you might not hold such extreme views on the other end, you kind of like to like bring a balance, maybe exasperate your views. How does the mic sound today, by the way? Does the mic sound a little bit more consistent than we've been hearing? I bought out the old Yeti to see if that would make a difference. So, and we'll get into flows in 1 second. I want to move over and talk a little bit about the 2 year. There's a video on the channel not too long ago, within the last few weeks, that talks about the greatest opportunity over the next 6 to 12 months. And it's not a Bitcoin trade. It's not a crypto trade. When I talk about greatest opportunity, I'm talking about highest probability. You'll see that in that trade, if you look at a move that were to happen on the 2 year, taking us down from where we are now at 3.8% to just below 2%, the risk to reward on that trade was like, it was something like 660%. If that were to happen, I think that as the Fed begins here to get ready to cut rates, there is a strong possibility this will happen. Here's the last rating cut cycle that began over here in December 2018. They raised rates, and as they raised rates, Paul Tudor Jones said that was a major policy mistake, and the Fed from that here on then is going to be cutting rates. And you could see that until you came to July, the summer of 2019. At this point, the Fed had cut 75 basis points, and you see the 2 year here obviously going bid during that time. And then we saw right ahead the Fed stopped QT. The Fed began balance sheet expansion. You saw this bearish continuation pattern develop, and then it ultimately wound up breaking down into the COVID. And I don't know that we're going to come back down towards the zero bound at any time soon. I think one day we will, because I think one day the Fed is going to have no choice but to come in order to keep this Ponzi going, to come in and inflate the system once again and just run the printers, not because they want to, because they'll have no choice. So I do think that we will have an opportunity again to see rates a lot lower than anticipated. I don't think next time that happens, the Fed is going to wait so long to begin cutting them. And I'm sorry, to begin raising them. And I think that going forward, we're going to see sharper and more violent, quicker cycles. Now that obviously there are a lot of moving pieces right now, and you saw the Genius Act pass, and we're hoping over the next 5 years, it's a long time in the markets, that we see a more consistent bid into U.S. Treasuries, albeit short-term Treasuries, and as the stable coin market is expected to grow by a magnitude that obviously is going to help entrench the U.S. Treasury market. Nevertheless, it's a fluid situation, so we're going to keep and make sure that we stay about it. Let's talk a little bit further about the 2 year. So most importantly is where are you wrong? And if you see the 2 year at any point in time, and could we see something that causes expectations for inflation to rise? You look at today and you say, well, okay, well, people's expectations are now more grounded. But the thing is that all of this kicking of the can down to what is now a date of August 1st continues. And come August 1st, maybe we have some clarity and maybe we don't. And maybe we begin to see in the months ahead, ultimately, some higher inflation prints, and whether or not that winds up being something that is quickly faded again or is, self-fulfilling, we'll find out. We don't know. But right now we're looking at true inflation, and I mean, we're under target here. It looks pretty good. I don't see that happening. We saw inflation data come out this week and it came in below expectations. And of course, next month we'll have to do it all again. If you look at what's going on, or I want to look at what's going on here with oil and just get just get a quick. I mean, oil is at $66 a barrel. It doesn't seem like that's going to be, putting any pressure out on the market. And ultimate, because we had this black diamond. Let me come down to a smaller time frame over here. Let me come down to an 8 hour. We had this black diamond and then a conservative repair, and that's been retested, and it hasn't yet made a higher high. It might not. I mean, I'm looking for where this breaks down and is faded, and I wonder. It seems aggressive to me. It's such a steep angle like this, and you can see that. I mean, I don't know if that held or not. And then it come down to over here, and is that like a breakdown underway? I think I would need to see, for me personally, oil trading under $59 a barrel to say that, yeah, that's a confirmed breakdown. If that were happening, my expectations of inflation going forward from there are going to be greatly reduced. Greatly reduced. And the reason I'm talking all about that is because the only thing that I think that could cause inflation and henceforth the 2 year to have some pressure on it. And I'm not seeing that right now. Again, the macro could change rapidly, so we have to always be watching and have our awareness about us. Now, I think 10 year, and remember, I said stay away from any long duration, and including the 10 year, and of course 20, 30 year. As the Fed begins cutting rates, you might see those sell off further, and you might see the 2 year coming down, the 10 year even. I don't know, but the 20 and 30 year likely. And ultimately, I believe we get a breakout here to the upside. So that's, again, I'm wrong if we break down. So I don't really see those things happening. I'm trying to see the risk for the 2 year. But regardless of what you think, if you break above this line, something's wrong and you're wrong, and that's a good place to manage risk around. And then at that point, you look for a further breakdown to re-engage the trade. Now, so again, my expectations are we're going to be coming down as the Fed begins cutting rates. I think that it's a healthy target, just below 2%. No, it's the markets. Anything could happen, and right now, you've been seeing of a small time frame, okay? So let's come over here to January of this year, and the 2-year is down. And then you come and you look since January of this year. Where's January? I could say the 10-year is also down. The 10-year is down as well. What about from something more extreme? From September of 2024, 10-year is marketably sold off. And then I go September of 2024. So I mean a little compared to a lot on the 10-year. I don't know if the Fed brings down the Fed funds, likely the 2-year is coming. It's you're talking about 2-year duration compared to 10-year duration, and like for me, if the Fed begins lowering rates, that signals to me going forward, looking out into the future, that's likely going to cause inflation to be kicking up, not over the short term, not over the next 2 years but over the next 10, and that's why the 10 is kind of iffy, but the 20-year, the 30-year, you know, so that's the difference over there. So we had a couple of questions, and they were looking at the 2-year over here, and so this is traded off of the futures and ZT, and it's inverted. So here's the 2-year, right? Bonds go bid, it moves down. Bond sells off, it moves up, and it's going to go ahead and just jump over to ZT, and then I'm going to invert it so you can see it's the same. Like that's the 2-year you're looking at, and ZT over here. Right? That's a good place to manage risk. That's a good place. You take out this high, and this is a very tight stop loss. The risk reward here is extremely attractive, and it doesn't mean that you don't have to hit a stop. But if you do, then who knows, regardless of if you see some type of price action that was unexpected, you're safe and protected, and you could re-engage as you get a breakdown. So I'm going to invert this back so you can see the same. And then jumping over here, and you're looking at, this is looking on the weekly chart. You could see this looks like looks like it could break either way, right? It's just very well done, the 2-way. What I notice here is the volume is winding down over here, right? The volume's winding down as the 2-year is rising. Is that good? Let's look over here. Because you guys know I don't even consult volume, but I'm trying to get a read from the volume, as it was for sure. As you came in over here, there was some selling going on, right? Again, just making observations and seeing whether they stick or not. Ultimately, I prefer sticking to the charts. Let me come back to this one first. Yep, back over here, and yes, if you break out over here, you're expecting here for bonds to go to 2-year to go bid and for an acceleration. And if you break down over here, obviously, that's a fantastic place to manage risk. I would have that blue line obviously touching down a little bit lower. Personally, I mean, this is great because you have where the bodies on the weekly found it, but I would go off of the one touch of the lowest point, keeping that same angle, and I would just have it like that, and give it a little bit of room. If it broke down, you're out of the trade. Pointing back over here to what happened back in 2007, you could see a very similar pattern developing, and you have that horizontal resistance. Look over here, it actually broke down first. So a similar pattern was developing, and then over there you see those red bars coming below, and you can see that there was a actual breakdown where the 2-year sold off first. And then if you hit your stop loss, what you're doing over there is looking to where to re-engage. And then on the breakout is when you buy again. So it's a perfect example of what's happening right now. So if you were to see, for example, all of a sudden 2-year to sell off, you're on the sidelines, you're waiting, you're observing, and then you're setting up that next, whether it's like this or whether it's like this, you're setting up your next point to re-engage. That's a great example, right? Forget the volume, focus out on the technicals. And that's what's going on here right now with the 2 year. And again, great risk to reward here. And this is more of like the macro. And what looking at the macro, the Fed and Powell said if it weren't for the tariffs, he would be cutting already. But he's uncertain about what's going to take place because of the tariffs. So he's kind of like just giving it some time to observe before making a rash decision. And but they're looking to cut. We're looking at inflation and we're saying, okay, once we finally get clarity on these tariffs, which might or may not be taco August 1st, then maybe there is a one-off adjustment in prices, and maybe the U.S. consumer is forced to eat some more of that, and we see some rise in pricing. Maybe over the next couple of months, that's reflected in the CPI, but that's likely it. And then likely we continue these strong deflationary forces continue to go ahead and take be paramount. And if that's happening, then at that point, moving forward, with the change of Powell's term coming to an end, a new Fed coming in, it seems that the Fed into 2026 is going to begin cutting, and it seems like a very strong macro trade. I'm reminded over here again of Paul Tudor Jones back in right over here in December of 2018, and as the Fed cut, and he's like, nope, that's it. And then you could see bonds continue to go the 2 year bid over here. What else are we looking at? And let's get into the thick of it. And we're looking at, a weird sight, seeing Bitcoin in the red and seeing some alts in the green. But again, we saw that coming, and we could see that more importantly, our positioning reflects that when we see that we're long alts and we're just on the sidelines on Bitcoin. That's exactly how we should be positioned. I think I'm going to save it for next week for Monday, Tuesday, but I want to get further into Ethereum and the structure and my expectations and how we could go ahead and incorporate what we've been learning on Bitcoin. And let me just go ahead and pull up the right Bitcoin chart. Oh, it's right here. And see how we could incorporate that not just into Ethereum, but also into all other assets. So stand by for that. I'm going to leave this chart on Ethereum so that I'm reminded of it and come back to it over there. And because and just why I'm here, just to like the structure of Ethereum is like these lines. They're not bright, so you can't see them. Maybe I can make it a little bit. I don't want to get into it now. I don't want to do it. I want to do it. I want to do it. I want to get into if we come too far too quick and what our expectations are. But this is the structure I have as Ethereum over here. I'll highlight it, make it easier for you to use. And you can see that down over here. And then this is the structure of Bitcoin. It's all off. I have to figure it out, and I have to figure out where exactly and which is the right structure. And then from there, we're able to go ahead and be able to find out what our floor is and be able to manage risk around that. Sorry for the quick sideways segue. Bring it back over here and just talk about what's taking place in the markets and whether or not we've come too far too quickly. And you could see ever since Trump said bye, we've had quite an acceleration out of the drawdown, and it's been a V making new all-time highs, and it's beautiful. And then we look at the anatomy of a 20% drawdown. We're looking at red. And right now, coming out of a 20% drawdown, as it turns out that we have come far. The question is, have we come too far, too quick, right? So we've come the furthest out of any 20% drawdown. And when I say the furthest, we're the highest out of it right now. We're deviating outside the highest deviation. Does that mean that we have come too far? Absolutely not necessarily. Notice that the other ones that have come the furthest, and there's a few. There's the 2015, right? And as you came into what was the summer, right, and through the end of September, there was pressure on the 2015 variation, right? That was one that was towards the top tier over here. And then as the seasonalities at the end of September kicked in, it wound up, in this case being just break even, but it wound up coming out of there quite nicely. I'm looking now at the 2018 variation over here. This is right before we came into the 2020 crisis. And are there a lot of similarities between now and then? No, not too much, except for no, not too much, except that they began cutting rates a little bit. And I was thinking of QT. QT began running, but we're almost towards the end of it. There's a lot more similarities to 2019 than 2018. And you can see at this point in time, coming into the end of the year through September, we had a little bit of seasonalities kick in with the downside movement and just, basically flat into the end of the year. We have also the 2020. That was a big one because we had, obviously, in March 2020, we had the massive drawdown. The major difference was that Powell flooded the system, and then from there on in, they're running QE. So that's when where outright easing is taking place. That's when monetary policy is aligned for Bitcoin to actually be really running. We don't have those similarities lined up yet. Nevertheless, coming out of 2020, you saw from where we are today and until the end of the summer that acceleration continued. Like right now, off of the bottom, you're up 40%. Off of the top, you're up almost 5%. Coming out of 2020, forget 40, we're up 40% now, right? And here's when you were up, I can't do, I was trying to do 5%. So 51% would be 5%. So this is kind of where we are right now. And you could see there was a little bit of a shakeout then, or a big shakeout, and then price recovers. And then you could see into August, price was up 87%. We're up 40% right now. This is a March 20% greater than 20% drawdown. This is a March drawdown. This current drawdown's in April. By August, we were up initially the 40% where we are today, and we were up another from the low 40% up to over 87%. So have we come too far? Well, again, we had extremely easy monetary policy then that you do not have now. There was a difference over there. And then you see in September, even then, you had the seasonalities kick in and you saw that drawdown. The one that we are very similar to is the one over here in 1998. Why are we similar to that one? Well, we're coming out of a 20% drawdown. We're just above that, but pretty close. And back then is similar that 1996, 1997, the 2 years before there, you saw the S&P 500 up over 20%. It's the same thing where we are today, 2023, 2024. The 2 years before this current year, we were up over 20%. So we have those similarities. And as you all know the story, not only was this year, 1998, strong, ending up towards the top tier over here, but, the next 2 years after that was the bull, the dot-com bull, right? And you know what the story of that, it was the last innings of that one that saw the mega returns at the end. Are we headed for something like that? And you know what? We talked about many times the seasonalities over here in September. I could say in 1998, the one that's similar, we just consolidated sideways during that period. In most of the others, we saw a more significant drawdown. I'm looking forward, and we'll look at the end of the year. If we're towards this top year, come on, coming into the next year, I mean, do you think the Bitcoin run is over? Or just getting started? That's a question to bring out over there for you all. But look at the seasonalities, because we talked about that September. So far, out of the drawdown, we're towards the top tier, like over deviating. Have we come too far? As you come into September, here's the middle of August and through the first 3 weeks of September, seasonality suggests that there's that pressure out on equities, and you could see it in all those past deviations that we just looked at, all except 1998. And 1998 during this period actually just ran sideways, but all of them were under some pressure, a little bit of pressure, and then into the end of the year you saw them be able to regain their footing. I think that's a likely um, scenario ahead. I don't think that we've come too far. I don't. I think that again, you get into those situations where you're able to see your winners continue to run. I do think that there is the outside of like looking at what happened in 2020, where you saw the Nasdaq crush it through August, like there was massive amount of printing going on. There was stimulus being handed out. It was a different situation than we're into today. I don't foresee that happening. That's an extreme, I think, to the upside. I think that even though we've been, towards the top of what past seasonalities and deviations suggest, I think that to see some type of sideways chop into and through the end of September, that seems like that would be the best case and super, super, super bullish overall. If you come back and you look at, this is average weekly retail flows and estimated. And historically, the seasonalities again, we've just entered what was the best period. And you can see currently we followed those flows. And now we're actually a little under. But as we move towards July and through August, they're expected to actually dwindle, and we're seeing a lot more of the same. Not exactly, but a lot more of the same. There's no reason to think that it's not going to rhyme. We're coming towards earnings, and therefore we're into the blackout period right now. And you could see here through the beginning of August from where we are today, we're going to see that constant corporate bid coming off pretty substantially. So again, there's a reason for seasonalities and why these things tend to play out as they do. Am I trying to draw back within the degen inside you right here as markets are trading new all-time highs, right? It's great. It's fantastic. We're holding on to some really great positions. But nevertheless, like, look, we continue to hold them until momentum takes us out. But expectations is that we're right on time and we're entering into a period right now where we should have a little bit of outside of like ultra easy monetary policy taking place, just a little bit more of grounded expectations. That's all I could say. And then the good news here is that dealers may not be long much gamma at current spot, but even like a 2% sell-off should put a floor in the decline, and that means to me that like, let's take a look at the chart. Let's focus in on the technicals, right? What do we have going on? We have, I mean, that looks like an accumulation cylinder, except that it's not kicking up, so not really. It looks just more like a channel, right? And here's the all-time high, so I'm putting the horizontal over there. And as long as we hold that, right? Hey, maybe like if we're able to consolidate sideways, but not sideways and slightly up, mega bullish. If we break down from this is where I'm concerned with the risk. If we break down, then we have to go ahead and we have to watch the retest into the all-time high, right? And I'm looking right around this area. I think it's more of like a box. Let me draw a box in. I can't remember the last time I drew a box in, but let me go ahead. I guess I got to start there and all through here. And, if we trade below that, then yeah, then that's not good. No bueno. Something's off. We shouldn't be doing that. But I'm not. See, I don't like that. Watch that winds up being that. I'm just trying to see. Extremely healthy where we are today. And I hope that the positions we are in continue to hold and run. But again, like even breaking down here as we come through the summer and through September, nothing wrong with that. We want to hold this. This is where we should see willing buyers coming in. And if that were to happen, this might be a place really that you want to look to go ahead and be a dip buyer. And let's just see in through September, a nice 5% correction. I mean, obviously very bullish if all that to happen. Below that, though, something's off, some things might be different. And just because we looked at and focused on these top deviations, look over here at 1968. And you could see that as you came in through the end of the August, it was looking pretty good. It was at the highest point since the drawdown. Now, it never recovered. We've recovered this time, and which is why I focus on these top deviations, which had also recovered by this point. We are definitely outside here. It does look like a V, but you know, we have to watch out. You never know what's going to happen, and we want to be prepared for everything. It was a great week here across the board, and it was a great week across the board. I appreciate you spending time and putting the work in. It's been a joy managing the positions that we continue to hold. I hope they continue to build. There are some beautiful, beautiful, beautiful trades taking place right now. Rest up, enjoy your weekend, show some love on the way out today. Replay crew, hit the thumbs up, hit the like, invite a friend to the channel. Be like, listen, pick a video this week that you and watch it. See what you think. Everyone have a beautiful day. God bless you, and I'll see you all on the inside.